Hey everybody, this is John with UrbanDigs. Noah's out this week, so I'll be handling the weekly update. It's an honor because it's the first week of the reopening, so congratulations everybody. I suppose now the actual hard work begins because buyers are finally out, finally having a chance to look at places and finally hoping getting some deals done. I'm going to keep this short and sweet, so let's jump right into it. Let's take a look at the actives. Let's see, supply is coming in at 5,969. That's about 500 or so more than last week as they're starting to come in. That's to be expected. We expected supply to pop up in these coming weeks as the reopening started. And with that, let's take a quick look at pending sales. That's going to lag supply a little bit because it's going to take a little while for the buyers to get out, kick the tires, sign the deals. That's just how it is. Pending sales coming in at 1,651. That's a decrease of about 65 or so from last week, as you'll see on the chart up there right now. Again, to be expected. Let's not look too much into that. Now let's talk about weekly new actives. And let me go to the dashboard and let's take a look at those. So weekly new actives, that's basically how many listings came on the market this week. And again, we're expecting that pop, so let's see what it looks like. Let's see here. 1 week ago, active, and let's say search, and what do we have here? And weekly new actives are coming in at 605. So 605 new listings, that's certainly a pop. I think last week we had about close to 300, 294. So we've doubled our count of weekly actives. That's great. There's a ton of missing inventory. So it's great that the sellers are finally coming back, coming onto the market. Hopefully they're coming on at advantageous prices to kind of get deals done. Let's check it out. As the contract signed numbers come in soon. And let's, speaking of which, let's see how the contract signs are doing this week. We go to contract signed, we hit search, and contract signings for this week, 82. Okay, so it's not up that much. We're up about 5 or so from last week when we said we had about 77. That is a slight increase, about 5-6% or so. And again, that's to be expected. Contract signs are simply just going to lag actives. That's just the nature of the beast. So that's your weekly update. I'm not even going to bother going into off-market. It's probably in the 140s, 150s, but that's at this point it's becoming sort of a seasonal number, and it's back to its trend. There are a couple things I'd like to point out to you ahead of this week and the next week. In the coming week, you're going to see market reports, second quarter market reports coming out, and they are going to be chock full of confusing information for your consumers. And there's multiple reasons for that. Number one, of course, is the pandemic. So we had 3 months of inactivity that made headlines with all kinds of craziness, not to mention low market activity. Listings dropped off the map, contract signed dropped off the map, just deal volume, everything just went null. We know this. This is to be expected. But what's not expected, because people have simply forgotten, is that last year, which we're going to be comparing ourselves to, last year, second quarter, we had that whole mansion tax thing. If you remember that, July 1st, the new mansion tax kicked in with the higher rates. So at the end of the second quarter, we saw a whole bunch of more expensive, larger listings closing just to beat that deadline. And that juiced that median price, an average price for the second quarter of 2019. So now, second quarter 2020 reports are coming out. So not only are we low in activity, but when you compare it to a juiced quarter a year ago, it's going to look dismal. And you're going to see numbers down 25%, down 30%, just in terms of actual median prices. And it's going to look like the market fell off a cliff and we've hit a depression. It's not the case. Bear in mind that any quarterly reports now really should be viewed for simply context for what has happened in the last few months about market activity, really. Any sort of forward-looking pricing information we just don't have it. We have to wait for those closings to come in. We've only had a handful. I think as Noah mentioned last week, they're suggesting perhaps a 15% hit on the median price, but it's such a small sample size, we're just going to have to wait for more closings to come in. That's going to happen as we enter July, hopefully August. We're going to have some more information. And you got to expect these quarterly prices, these monthly prices, these medians, these averages, they're going to move around significantly until we have enough of a sample size to really make a base. So please let your clients be aware of that, both on the buy side and the sell side. So if they're looking for market reports or looking for averages to kind of get a sense of where things are trading, it's just not useful at this point. All right. Well, I hope you guys had a productive first week. It's my dog. She even barks hello. And enjoy next week, and I hope you're all productive and start kicking some ass. All right, this is John from UrbanDigs. See you next week.